Good morning, Mark Soderberg with ADM Investor Services with your morning ag market update. Mostly lower trade across the ag space here this morning as markets do await key crush data from NOPA later this morning. Corn and beans right now are down about a penny. Wheat prices are down 2 to 3 cents. Saw some volatility in the products overnight. Meal right now is steady. Bean oil did see an initial surge, then sell off. Now we're rebounding again right now, up about 25 to 30 points. With the U.S. government now extending into its third week, usage data has been scarce, with over 95% of the country's soybean crushers members of NOPA. This is a pretty good proxy, very good proxy for the industry as a whole. NOPA members are expected to have processed just over 186 million bushels of soybeans in September, which, if realized, would be down nearly 2% from August, where they crushed 190 million bushels, largely due to one fewer day, but it would be up 5% from September of a year ago, and also a record high for the month. Bean oil stocks are expected to have slipped 2% to 1.22 billion pounds. After an initial surge overnight in bean oil prices, that was largely driven by President Trump's threat late yesterday to ban the imports of used cooking oil from China, this in retaliation for their boycott of U.S. soybean imports. I'm not sure how much leverage the Trump administration felt that they would get from playing this card, but so far the market's reaction, I think, is pretty much saying not much. U.S. imports of used cooking oil from China have already plummeted this year with the tariffs on imports from China, and also given the fact that under the Z45 tax credits only apply to biofuels produced from domestically sourced feedstock. January through August imports of used cooking oil from China only reached 291,000 tons. That's down 65% year over year. And when you look at the dollar amount of used cooking oil we bought last year from China and the amount of beans China typically buys from the U.S., there's really no comparison. Last year, we imported a record 1.27 million metric tons from China. That was valued at $1.1 billion, while China, on the other hand, imported just over 22 million metric tons of U.S. soybeans, that valued at over $12 billion. So bottom line, I would not expect China to suddenly turn to U.S. soybean imports if we threaten to no longer import used cooking oil, something that we've already largely eliminated. U.S.-Chinese trade tensions remain elevated. Bulls remain hopeful. President Trump and Yi do meet later this month at the sidelines of APEC summit in South Korea. Weather-wise, saw some light showers moving across the northern Midwest yesterday and overnight. Some heavier pockets of rain did develop in south central Minnesota and west central Wisconsin. A few more dry days across the southeastern half to 2/3 of the nation's corn and soybean belt before showers start spreading from west to east. This weekend, rains of between 1 to 2 inches across the central and eastern corn belt will slow the remaining harvest. Nationally, as of this past Sunday, corn harvest is believed to be nearing the halfway point, with soybean harvest right around 60%. Scattered showers still expected to start filling in west central and northern growing areas of Brazil during the second half of October as they slowly transition into their monsoonal season. Inside trade for Deeks corn overnight as it hovers just above 410. At these price levels, I still think the market is discounting U.S. corn yields off 2 to 3 bushels an acre from the USDA September forecast of 186.7. Inside trade for Nova beans hovering just above $10. Last night's open in Deeks oil was just shy of its October high at 51.60. No follow through to the upside in the wheat, despite yesterday's key reversal day in Kansas City. South Korea did reportedly buy about 50,000 metric tons of U.S. milling wheat in a snap tender. Thank you for listening, everyone, and I hope you have a wonderful Wednesday.